Well, hello folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. All right, let's pull up that screen. Oh, SIRC, man, their revenues are up huge. Their net income up is huge. So let's get into this solar company. All right, so this is Solar Integrated Roofing Company, SIRC, and they sell not only solar roofing, but also solar EV charging. So they're heavily involved in all of that. And these most recent bills that have been passed, infrastructure, also the so-called inflation bill.
How dare you!
Is very helpful to solar. And they've really been on a run as far as their revenues. They've had a huge improvement year over year. It says SIRC, an integrated single source solar power roofing system, an EV charging company. They reported its financial and operational results for the second quarter ending in June. Now here's where it gets interesting. The revenue in the second quarter year over year increased by 746%. Yeah, that's a lot. Holy crap. To 66 million compared to 7.8 million last year at the same quarter. The net income, and this is really wild, 18.9 million in net income after a $3.3 million loss the year before. That's what you call an improvement. They were awarded a 5-year blanket purchase agreement with the U.S. General Services Administration as part of the $5 billion in federal funds allocated to EV charging installations in the Biden administration infrastructure bill. That's what I was talking about. Secured an agreement with AED to assist the development and financing of turnkey alternative energy systems comprised of solar, battery storage, and EV charging, etc. And then the management commentary says the second quarter was marked by a strong cadence of continued execution, not only by record revenue and profitability, but the introduction of new partners and innovative financing products. And they're calling for $225 million in revenue this year. So they must be looking for a really strong second half. It says, with the completion of our audited financials, which is good to see audited, said we expect a future NASDAQ listing to bring additional liquidity and broaden our shareholder base through an enhanced profile with the investment community. And we're going to get into their actual financials and look at them. But as you know, I'm really only buying right now profitable penny stocks in my portfolio. I am holding some that are not profitable. But right now, to buy one, I need to see profitability and I need to see strong growth. And I've got some stocks that I cover that are doing exactly that. Look, everything in the penny stock land is struggling right now. It's rough. It's rough for everything. I mean, yesterday was brutal across the board. I think the Dow was down 600 points, and then the NASDAQ was down over 200. So the market has pretty much sucked.
That's right, it sucks.
That's right, it sucked. But there are some opportunities out there. We're going to take a good hard look at SIRC because I want to take a look at the chart. I want to look at their market cap, obviously their financials. I want to look at their balance sheet. Let's look and see how profitable they really are. And then I want to look at their PE ratio, which we ought to be able to have one now because they are profitable. All right, so their market cap right now is $229 million. So we're going to find out whether that's high or low or what the deal is with that. But 229, so let's remember that number. And they have 560 million outstanding shares. They have authorized of 650, so I don't think we're in any kind of concern about them doing any sort of reverse split or anything like that. They wouldn't need to do that. They're profitable. And I don't think they need to raise their authorized shares or do any of that. I don't even think they need to do any dilution, but there seems to always be dilution in penny stock land. It's just kind of the way it is. But anyway, that market cap doesn't concern me too much given what they just made, but you know, we'll take a harder look at that. All right, so let's take a look at what the stock's been doing on the chart. As we look at this thing, it had a huge run up several weeks ago. Looks like back in July, it ran like crazy. Obviously had some good news, and I think they got a couple of real nice contracts. And I'm sure that inflation bill got some people excited about solar as well. That probably played a big role, but it ran from 18 cents up to 60. It has pulled back down to 33. And let's see what it did. Okay, it's probably sitting right here on this. Let me draw that in. Yeah, that's where it's sitting. It's got support right there. So that makes sense why it would be sitting at 33. And the big rundown, I assume, has to do with just the fact that the last few days have sucked. And this thing just got ahead of itself. I mean, it basically ran from, what, 18 cents up to 60. So yeah, it's pulled back and people have been taking some profit. But there you see the support based on, gosh, you got to go way back for that. That was on a year ago. Good grief, a year ago. There's your support. And let's see, there's another support right here at 30 cents. And I'm going to take a look at what would be a good price for me to buy some SIRC. But before I do that, I've got to look real hard at these financials and let's see the actual numbers. Now, there's some numbers in here that interest me a lot. First of all, their cash, they don't have that great a cash position. That's not that good. But what does interest me a lot, work in progress receivables, 68 million. So that's up 100% from a year ago from 33 million. That interests me quite a bit. So total current assets have jumped from 43 million to 77 million. So that's pretty interesting. This goodwill crap. Goodwill. Give me a break. They love to throw that in there. But as you can see, it has increased quite a bit, and this is a much better balance sheet than it was a year ago. Now let's get into the heart of the issue. This is what I care about the most. This revenue increase is crazy, from 7.9 million to 66 million. That's fantastic. Now, did they make money? We know they did, but how much? Operating expenses, et cetera, of 9. So a net income from operations of 21 million, that's outstanding. For a $66 million revenue, that's not bad at all. Then I'm sure there's some other expenses down here. Interest expense, of course, of $2 million. So $18.8 million net profit after interest expense. That's really, really good. Now I'm interested. So 19 million. So what did we say that was? 230 million in the market cap. If you multiplied this times 4, that would be just under 80 million. Divide that into 230 million, you've got a forward PE that's super low. I'm interested. So the question is, where would I buy this if I was going to buy? And I am very interested. Those are super strong financials. Let's see, like I say, that's not a bad price right now. Now this thing could pull down. I mean, we're in some weird times. This is not a bad price to buy this stock, but you know, you just never know. It wouldn't shock me if it pulled down into one of these areas, 30 cents or 28. It might even go as low as 25. I don't see it going back to 18 after those strong numbers, but you never know in this market. It is crazy. So I've got this one on my watch list big time, and I'm very interested in it, and it's definitely got my attention. All right, folks, and that's SIRC. Some of the best numbers. Man, those are strong numbers. Anyway, if you like this content, be sure to hit that like button. Lets me know to continue to cover SIRC. And if you haven't subscribed, hit that subscribe button. I'd appreciate it. And I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.